Okay, let's get right into it. There's a brand new tax break for 2025, and honestly, it's kind of buried inside this massive new bill. It's causing a lot of confusion, but for millions of you who work hourly, it could be a really big deal. So in this explainer, we're going to break down exactly what this thing is, and more importantly, how you can actually claim it.
So, first question, and it's a simple one. Did you work any overtime this year? Come on, think about it. If that answer is yes, then you are absolutely going to want to stick around because this new law could put money directly back into your pocket. So, why all the fuss? Well, people are calling this the overtime secret for a reason. This new rule, which is only on the books from 2025 through 2028, could be worth thousands of dollars to you. Yeah, I said thousands. It's a brand new deduction that a lot of people are going to miss if they're not paying attention.
All right, so what is this deduction really, and how in the world does it work? Let's decode this thing because I gotta tell you, it's not as simple as all my overtime is tax-free now. It's a little more specific than that.
Okay, if you remember one thing, remember this term, qualified overtime premium. That's the key to the whole thing. See, the law doesn't make your entire overtime check deductible. No, it only applies to the premium part, the extra money you get paid on top of your normal wage. So when you get time and a half, it's that and a half part that you get to deduct.
This right here, this is the biggest misunderstanding floating around. The myth is that, poof, all your overtime pay is magically tax-free. But the reality is much more specific. Only the premium portion of your overtime is deductible. It's a super important difference. You're still taxed on the time part, but you get a nice break on the and a half part.
And hey, it's not just us saying it's confusing. This comment from a Reddit thread really hits the nail on the head. People are asking, do I need to be a homeowner or have a million other deductions to make this work? Is this only for people who itemize? Well, as this person points out, nope.
And that leads us to the next myth-busting reality check. You do not need to itemize your deductions to get this tax break. This is what's called an above-the-line deduction, which is fantastic news. It basically means you get to take it in addition to the standard deduction, which nearly everyone takes. This makes it available to pretty much every single hourly worker who qualifies. All right, so we've covered the what. Now for the fun part, the how. How do you actually calculate this thing? It sounds complicated, I know, but for most people, there are a couple of really simple rules of thumb you can use. Don't worry, we're going to make the math super easy. Okay, let's start with the most common scenario. If you get paid standard time and a half for your overtime work, just remember this one simple trick, the divide by 3 rule. You just take your total overtime earnings for the entire year, and you divide that number by 3. That's it. Seriously, the number you get is your deduction. Let's run through a quick example to see how easy this is. Let's say you worked a bunch of extra hours this year, and when you add it all up, you earned a total of $15,000 in time and a half overtime pay. So you take that $15,000, you apply our simple divide by 3 rule, and boom, your deductible amount is $5,000. That's $5,000 you get to subtract from your income when you file your taxes. That's a huge deal. Now, you might be asking, well, what about double time? Maybe you worked on a holiday. Good news, the rule is just as simple, it just changes a little bit. For any money you earned at a double time rate, you use the divide by 4 rule. Take your total double time earnings, divide by 4, and that's your deduction. And hey, the law actually covers a lot more than just your basic overtime. It's designed to help lots of different workers. So things like special overtime rules for law enforcement officers, or even if you get a cash payout for your comp time, those can qualify too. The same basic ideas for calculations still apply. Okay, you knew this was coming, right? With any government tax law, there's always a little bit of fine print. And in this case, we've got maximums on how much you can deduct and some income limits that might reduce the benefit. So let's get into the nitty-gritty. Let's start with the maximums. If you're filing your taxes as a single person or married filing separately, the absolute most you can deduct for your overtime premium in a single year is $12,500. Now, if you're married and you file a joint tax return with your spouse, that limit doubles. You get to deduct a combined total of up to $25,000 in qualified overtime premiums. Next up are the income limits. So this deduction starts to phase out or get smaller if your income goes over a certain level. The official term is modified adjusted gross income, or MAGI, but just think of it as your total income. As you can see here, for single filers, that phase-out starts at 150 grand. For married couples filing jointly, it's 300 grand. If you make more than that, your deduction will be reduced. Okay, we are in the home stretch. You know what this thing is, you know how to calculate it, and you know the limits. So the last piece of the puzzle, and maybe the most important, is how do you actually claim it on your taxes? Now listen up, because this is probably the most important action item for you. For the 2025 tax year, the responsibility for tracking this is on you, the taxpayer. Your employer isn't required to give you a special report. That means you have to, keep every single pay stub from the year. Now, some employers might put an estimate in box 14 of your W-2, but you need your pay stubs to prove it and double-check their math. The good news is that filing should be pretty straightforward. The tax software companies are all over this. The process is going to look something like this. First, you enter your W-2 info, like you always do. Then, you'll look for a section that deals with less common stuff, maybe called Other Situations. In there, you'll see an option for overtime, and the software will just walk you through a few questions where you type in the deductible amount that you already calculated. Easy peasy. Okay, let's wrap this all up with one final and really critical reminder. This amazing new deduction is not a permanent change to the tax code. Not at all. It's a temporary opportunity, and you really, really don't want to miss out. This timeline lays it all out. This deduction kicks in for the 2025 tax year. It's also good for 2026 and 2027, but as the law is written right now, it goes away after the 2028 tax year. That gives you a 4-year window. That's it. 4 chances to take advantage of this. So at the end of the day, it all comes down to this, doesn't it? You're the one who worked the extra hours. You put in the hard work, and you earned that premium pay. The government has given you a way to keep more of that money you worked so hard for. So the only question left is, are you going to take the steps to claim it?